Testing, testing, testing. JB here. October 2nd, 2023. Welcome to the fourth quarter. Quite a interesting start to the first month. Well, the first day of October. Markets look like they were going to gap higher. We're going to have a great green session. And then we've just melted since let's see where we really hit the top. Right around 428.58. And that was at like 11:30. So pretty much right at Europe close. Um, Yeah, I mean, so over the weekend, testing. Uh, yeah, I talked on Rants last week. This government shutdown situation just created an opportunity for all these media outlets to just discuss it in just over and over and over again, to almost in a to I wouldn't call it fear mongering, but it just made the situation. You would think that, oh my gosh, the market's going to collapse come Monday if there was no agreement on uh, on this government shutdown. Sure enough, last ditch effort on Saturday. Um, Kicked the can down 45 more days. So this still is going to loom over us. But it's always this debt ceiling thing, this government shutdown thing always comes up every year. There's a new um, thing that holds talks to the very end. It becomes this great piece for the media outlets to cover, to fearmonger. Everybody starts getting all worried, and then things kind of work out. I mean, it's a shame that there are people in the government like the army folks who take care of the country that may not have gotten paid if this happens, which is crazy if you think about it. But so we gapped higher overnight and then sold off a little bit into the open, then bounced back to that 11:30 point. You would think we're going to have a great green session, and here we are, pretty much right at the lows of the day. Um, I'm not. Again, I always say this, but I don't have like my bear suit on. But I think we're getting kind of close. But I think that 415 handle on the SPY, I think it's got to get there, and there might have to be some kind of session where we get 1.5-2% to the downside and then bounce some capitulation where the folks who are selling start throwing in the towel. People who think, hey, this is a great buying opportunity, start to jump in, and then maybe we can find some support. Earnings season kicks off next week. We have the banks, I believe Thursday and Friday. I have to go check the dates. I know Citi reports on Friday. We also have CPI numbers on the 12th. I think that's a Thursday morning. So those are kind of some catalysts that could move the markets a little bit coming up in the coming weeks. And I think, and we just got through the historically worst period for stocks over the course of an entire year. So the last week or two of September historically is the worst performing time frame for markets. So we got through that, got through Black Monday, right? Everybody's worried about Mondays in October. A couple more Mondays to go in October, and then maybe we can find some footing and look for a bounce. Not doing too much on the call side, and even on the put side, I was looking for some positions. I still have my Nike puts. I'll talk about that in a second. But yeah, and then IWM just broke 174.29 was the level last week. Broke through that just a little while ago. I don't think that bodes well. And I'm not saying there's not going to be bounces. We saw some crazy reversals last week out of nowhere, both sides. I just think it's like an anchor right now on the market. I think we're just going to keep melting until we hit around 415, 416, and maybe we can look at possibly getting a bounce. But who knows? Maybe we keep going. I'm not going to rule that out either, and I'm certainly not going to be in a position where I don't have some hedges or some puts on just in case that happens. But I'll probably be more open to adding some call or bounce opportunity calls on some names, and then maybe starting to look for some positions to play into earnings for premium build. Netflix. Let me see what date the Netflix reports. That typically is the start of the big. Excuse me. The kicks off kind of the tech sector, and Netflix already had a great quarter. Last quarter they report on the 18th, so you're talking 2 weeks from Wednesday, and yeah, they'll kind of kick off the tech sector, and if they can set a good tone, which I think they will, then maybe that will set things up for a bounce. So that's the SPY. IWM still have some puts on. I locked. Unfortunately, I wish I had. Let's see what they are now. Sorry, folks. I'm just looking up the. Sorry, folks. Trying to pull my chart on IWM. It's not coming up here. Yeah. Anyway, so you could see this morning the market was rallying. The S&P was turning green, and the small caps were still in the red. And right now, you look, the S&P is down about 0.7%, 0.70%, and the small caps are down nearly 1.75%. On the flip side, you take a look at last week, the Nasdaq and the small caps were actually green on the week. not by much, but the S&P was down for the fourth straight week. So you could have said, hey, maybe this is the bottom for the small caps or just a small little relief bounce, and it looks like the latter right now. So talk about gold, and even with the market gapping up overnight and this morning, gold was still finding some pressure. I've talked about all this backdrop last week on the rant, so I'm not going to go too much into it right now. But that 1850 handle I thought was a key support resistance area. I have my annotations, and these are annotations over 10 years. I have to pull back to see how far these go, but I think that 1850 was a key point, and I think 1820 comes soon. And I know it's kind of hard to see if I post this in the chat room, but you can pull it up, and it looks like 1820 next, and then maybe 1780. I don't know if it get to 1780, but if the start of 2023, gold I believe was at 1824. So if we get down to 1824, that means gold is flat for the entire year, which would be pretty remarkable considering it was at over 2,000 for a lot of the spring. Let's see what we opened. Yeah, 1826, open, high, low, close. 1826.20 is where gold started in 2023. And, much as I think at some point gold will bounce, I think 1820 is probably a reasonable target now. Gold's down. This will be the sixth straight day to the downside. It just seems like people, once it hits a point, then people who've been holding on probably some profits this year, maybe repositioning and throwing the towel, take some off, and then revisit at lower prices. Just my thought process there. I also have those J-Dust calls. J-Dust is up nearly 7% today. At some point, I was looking today, but the calls aren't up too much. I have the 13,850s. So you'd sit here and lock some of those in yet. I think it's going substantially higher. What are they, 60 by 65 now? And I got them, I guess, at 45, so I'm up. So to sit there and look to lock some in, I prefer to wait until it gets into the nines, and which might happen today. But I talked about last week, if the markets are selling off, and a lot of these miners are small cap names, so once those sell off and gold sells off, you get a double whammy, and then you get these outsized moves on J-Dust and Dust. That's why I added those calls. I was looking for further out strikes in November, but I'll probably just stand pat on what I have, because at some point we saw it Friday with gold. Gold rallied all the way up to 1893 after the CPI, was it CPI data? PCE data came in pretty much in line. And then it reversed. People thought, hey, that's the bottom. Buy silver, buy gold. And take a look at silver today. It was getting destroyed. It was down 3%. What is it now? Silver's down 4.7%. Silver tends to be a lot more volatile than gold, but typically when gold is down, silver's down, or when silver's down, gold is down. So kind of tell with that pressure. I'm not saying that gold's going to have a 4% down day at some point, but similar to what I think has to happen to the market, there's got to be some kind of flush to wash out all those sellers, get the capitulation, and then we can start moving on a bounce. Talked about Nike last week on Friday with their earnings, which came in. It was a relief number. It came in not as, what's the best way to put it? Less than feared, better than feared, I guess you would say. Expectations were very low, so the fact that they beat them, I don't think that's much of a big deal. And then you see the pressure in some of these other apparel names and luxury names over the last 6 months or so. I think Nike's just going to head right back to where it was before it reported earnings, which I think is around $89. And I'm going to need that to happen this week. But Nike was gapping this morning over, I think it was 96.48 or so, right, the open, and then just reversed course. And I just think it's headed back down under $90. So I'll continue to hold my puts, which were solidly green in the morning, have come back. I think they're flat right now. And you take a look at this chart. I think it's just gonna fill that gap before the week is out. As crazy as that sounds, I mean, it's not that crazy. It's only $3 away to get to 91, and then $2 away to get down to 8. I think it was 89 and change when it reported earnings. So that was the thought process on Nike, and I think it can go down even if the market bounces at some point, which it's about remarkable bounce at some point. Whether it's going to be down 422 as the lows on the SPY when we had that reversal last week, that would be the next spot to watch for. We're down here 424 again on the SPY. It just does not look good. A couple other things. So this week there's still kind of a lull in catalyst for the market. We have the jobs report on Friday. I don't even know how much of a big deal that is unless there's a huge decrease. If the unemployment number drops, that would probably not be good for markets. If we have a very large amount of jobs added, probably beats expectations. Those two things would probably not bode well for markets. And then we also have the JOLTS number tomorrow, and the JOLTS number is actually shaken markets twice over the last 2 months. Back in July, we had a surprise rise. It was the biggest increase I think ever recorded in job openings, which was not good, right? So if there's more job openings, that means the economy's doing great and the Fed's going to raise rates. The market's sold off. I don't know if it was 1% or 1.5%. And then the flip side, back at the end of August, we had a reduction. With JOLTS showed that there was less jobs available. There was a decline in jobs. So that, on the flip side, you think the Fed might stand pat, because that means possibly it's cutting, their tightening policy is bearing fruit. So could be something to watch tomorrow. If we have some kind of surprise upbeat number, that could, I think, will pressure markets a little bit more. I think that's it. I don't really have much else to talk about. Some other names, I mean, I could talk about Weight Watchers down here at 1082. I was hoping it was just going to hold 11. Going to need probably some kind of catalyst or something to that effect to get it going, or a green session. If we have a green session, I think at some point it's back over $12. Well, gets back to $12, and then onward and upward from there. What else do we have on here? Ulta's over here for $402. Still have a couple puts. Going to need a big downside move in the coming days for those to come back to life. But I'll just hold what I have there. I'm not adding anything. It's similar to Lulu, and Lulu all the way up to, I think, 389 this morning, down here at 384. I'm still hopeful that's going to pull into the low 370s and 360s in a short period of time. Obviously, that's been kind of like watching paint dry, so I'm probably not going to try and trade that anymore, at least for the short term. So NVIDIA. So back in the day, when Goldman Spectacular put a stock on their conviction buy list, the stock would be up 5, 7, 8% the next day. And a little different here when you're talking about large mega cap companies. So right now, NVIDIA is a $1.1 trillion company. So to think that an analyst rating could add 100 billion or so to a stock just based on an analyst, that's pretty remarkable if you think about that some person can have that kind of impact on a stock. But Goldman Spectacular used to have huge impact on stocks when they did that conviction buy or sell rating. And it's up 2.5%. They've been talking, right? So the big buzzwords recently has been the Magnificent Seven, right? Those have been bringing up the markets. They have hidden all the other underlying stocks that have fallen or only up a fraction this year. Because of the Magnificent Seven, the Nasdaq's up 30% or whatever, the S&P's up 14%, and pretty much that's the main reason. Once those fall, forget it. Market's going to tumble. We're going to have a big crash, whatever. It just makes for a great story. And MarketWatch had it this morning. The Magnificent Seven tech stocks haven't been this cheap in 6 years, and that's the Goldman Sachs strategist. And I assume that's why they put the conviction buy rating on NVIDIA, because they think it's cheap. At some point NVIDIA will be higher than where it is now. I'm not saying it's not. Not going to rally in $500-600. Who knows? But it's just a tough one, NVIDIA. I remember when it was a couple bucks or $5, $10, way back, and then it started to rally. I could go back to see when it really started to move, and I never really. I just thought it was video cards, right? That's what I thought they did. So I really missed a lot of majority of the run. Back in the '90s. Let's see. I think pretty much all the way to even 2009, 2010. It was a $10, $11 stock, and it just sat there. So the higher it went, the more I couldn't get involved with it, because I never really dug deep into what else was possible with them. And then now you had, autonomous driving, 3D, now you have AI, all these other things that have come along that have really just boosted their business. Cloud, everything going to the cloud, all these. So it's very tough. So I try and stay away from that, because it's one of those that I missed the entire run. More so than not. I haven't traded much, and I probably stay away because I don't want to be, so in a nutshell, great. I mean, what was a $10 billion buyback they announced on their earnings, and that was when the stock was at 490. Well, actually, it had gapped higher on earnings. Their blackout period's over, so you have to think that's going to help boost the stock. That upgrade this morning. So if the market finds some footing, you take a look at the chart. Did it come down to it was 415? I think it hit the other day. I mean, it is up 6 of the past 7 sessions. It's green, and that 50-day moving average is at 449.39. I mean, even if the market's weak, you think if it can hold that, get back above that 50 and hold that into tomorrow, maybe it starts to, take a little market bounce, and the thing would be at $500. Also, you have the bullish crossover. So when the momentum indicators cross from the black line crosses the red line, I don't know if you can see that down at the bottom. Once those cross, usually that precedes a bullish move. So you already see some of it. Doesn't mean I'm going to sit here and get calls. Number one, because the premiums for me are just not. It's not how I trade. So I know Danger's been dabbling in those calls today, but right now it's at 446. So let's say you think it's going to go to 470 in the next day or two. Well, they're actually $1 by $1 too. That's not too bad. But then if it dips, you're going to get it. $5. You're going to get an instant 50% haircut. But and that's the flip side too. Is I still think we have room to the downside. So it makes it a little more difficult for me to wrap my head around adding any kind of being aggressive on any calls outside of some individual names that I think might bounce. And that's why I keep looking at ROKU. But ROKU did the same thing. It's almost like deja vu all over again, like Yogi Berra. I think, $72 at the open, and then just reverse course again down here at 69.66. At some point, that thing's going to rally $10 or $15, just like it always does. Once the sellers are done or what have you, it's just going to, if it goes back down to 67 or so, it's going to be $82 in a couple weeks. I think that's it. Intuitive Surgical. Yeah, it's another one of those names. So they have a huge buyback. So during times of in between earnings, you see some odd moves in the name because I think some of it has to be the company, acquiring some of their stock. Especially, it's down from 360 since I think that was their earnings report back in end of July. Yeah, I'm on the audio. Testing. And then you look today, Intuitive Surgical is barely down. So let's see. Yeah, it could be another name. I would look for some call. It looked great a couple weeks ago at the end of August when I traded those calls to the upside, and then I tried to do it again in the middle of September, and that didn't pan out. We had that big sell off. I just probably gonna stay away from Intuitive Surgical for now. I think some of these names that are under that umbrella of being affected by GLP-1, it's gonna be a tough environment to kind of trade those for now. Same, you take a look at some of these other names, the diabetes names, Dexcom, DXCM, Tandem, PODD, Medifast, another name. You look at some of these names, they're just getting pummeled, and there's not even data. I mean, there's data, but the earnings haven't caught up to what's going on, right? So imagine what happens when the earnings start to show that, hey, this business is being severely impacted by the prevalence of this new solution for diabetes and weight loss. And not that it's a new solution for diabetes, it's just becoming there's more awareness around it now where people can say, oh, wow, this is a great solution as opposed to some of these other options. And then as people don't have diabetes anymore, they don't need these, these products and services. So Intuitive Surgical, same thing. It's tough to know what does it mean when there's less obese people. You have to think, was Intuitive Surgical being priced for a less healthier population, right? Is that some of the valuation of Intuitive Surgical? Is because the market's pricing in more obese people, more people who have high blood pressure or cholesterol, or who are not fit, who are more susceptible to breaking bones and having ailments and needing surgery. And now that that forecast is probably come way down because of GLP-1, is that a reason to revalue Intuitive Surgical? So maybe that's the case. So it's tough for me to kind of get aggressive, to be anything but maybe a couple day lotto on Intuitive Surgical on an upgrade or some kind of break of resistance. But for now, I'll just probably sit on the sidelines. Great name though. I mean, it's no debt, has I think it's $9 billion in cash right now, no debt, and a great, huge opportunity. And some of the reason I think the stock has struggled too, Johnson & Johnson was going to come out with their robotic surgical robot, which keeps getting put off. Once there's any positive development on that side, it might pressure into surgical again. So I'll probably just stay away from now. I was trying to think of some of the other things I had on the watch list this morning. I didn't really have much else. October earnings, Netflix. I think that's it, folks. Gold still, if gold doesn't close over 1850 today, I have to think 1820s are coming. And I hate to add more positions because if it does go the other way, I don't want to lose the profits that I already have on the puts. And of course, hindsight's 2020. I should have held the rest of my 171 puts that I closed out on Friday. But again, coming Sunday morning or Saturday afternoon, and you see that the whole situation was they kicked the can down the road on the government shutdown. You kind of knew that the future was going to be higher. I just didn't know how gold was going to react. So it's kind of almost a sigh of relief saying, wow, good thing I locked those in. I don't want to lose all those profits come Monday. And here we are. I mean, gold's down almost another %, which is remarkable. So I think there's more to the story of gold than just, the Fed and stronger U.S. dollar and all the other things going on. I think there's more to the story. Otherwise, it might have bounced already. So, no regrets. Trying to think of some of the other names here. Tilray, right? So they got their approval, or at least the acquisition of the Bud assets came through. But I mean, just Tilray is a tough story. They have such a huge outstanding share count. They've diluted shareholders. But I think there's a huge opportunity in the coming months and years. So, unfortunately, the calls I have kind of pooped the bed. It comes with taking risk, right? So the risk is that you have a short report come out, and then also that there is a huge short interest, and they just keep punishing the stock. Lot easier to do when the market's going down, right? When the market was squeezing back at post-COVID. Well, not post-COVID, during the COVID bottom and after, very hard to short stocks because all the stocks did will go up, right? Buy the dip. That's all they do. And now it almost seems like we're in reverse, where even if a person is wrong on their short thesis or narrative, the stock still goes down just because there's more sellers than buyers. But I think at some point Tilray is going to be able to leverage that huge scale, their distribution network that's been added on from all these acquisitions. And then once they get the green light on, cannabis-infused beverages and things like that, they're going to be able to use that scale to really drive huge revenue growth and then hopefully profits and margin. But for now, it's a wait-and-see kind of situation. And the longer we wait to see, the lower the stock goes. Hopefully it finds a bottom here at some point, or there's some other catalyst. That's Tilray. VKTX. There was another, what was the other? I don't know if Unknown's on here. It's not on here. There was a company that had positive data. I don't know if it was on the pill solution. Was it GN? I'll have to go find out the ticker. Positive data on a weight loss drug, and the stock was up quite a bit. It was GL. I have to find a ticker. But VKTX was up on Friday and then just reversed course, just like it always does. And then today, Truist just came out about a half hour ago. They reiterated their buy rating on VKTX, maintained their $32 price target. It's similar to Tilray. I wouldn't call it a wait and see, but it's a wait situation right now, VKTX, until they announce their data on their pill solution, phase 2 data. So if that comes out positive, I think it trades north of 20, if not higher. The lower it goes, it's going to be tougher to see it into the 20s if it breaks into the single digits. I don't think that'll be the case, but hey, I've watched it melt here from 16 down to 10 on nothing. It's tough because it's still an early stage bio. So these early stage bio names, it's very easy for folks to short it or come up with some kind of bear case because they have no revenues, and it's a wild card knowing what the FDA is going to do or what's their data going to be like on these studies. So just creates an opportunity for some of these shorts. We talked about last week too, on the flip side, two names that I've followed for years on and off were acquired the same week, Intercept and Blue Apron. So hopefully there's some acquisitions. The biotech space, it seems like there's been a lull. A lot of acquisitions the last couple of years, and then this year it just seems like very quiet on the M&A front. I don't know if that's a good thing or not. You have to think NVO, LLY, going to have cash hoards to acquire Pfizer, going to have all this cash sitting on the sidelines ready to go. But I think some of the concern is that with rates where they are, it's almost like you're holding an asset now with if you have cash as opposed to having a finance debt, you can use that as a rationale and holding onto your cash until rates come down. So then you start doing some M&A. Anyway, that's it, folks. I'll try and get back on the audio again. Let's have a great day. Rock and roll.